There's a really fascinating economic experiment unfolding right now in the Gulf. The nation of Oman, they're basically throwing out their old playbook of just handing out state subsidies to entrepreneurs. Instead, they're diving headfirst into the super high-risk, but also high-reward world of venture capital. So let's break down what this huge pivot is all about.
Really, at its heart, this is a tale of two completely different philosophies. I mean, you've got the old model, right? Where the state was basically a sponsor. It was handing out capital that, let's be honest, felt a lot more like welfare. And that created this kind of sense of entitlement. But now, you have this whole new world. The state is acting like an investor. It's putting down risk capital and has real, hard expectations for performance and, getting a return. This isn't just some small policy tweak. We're talking about a massive shift in mindset.
Okay, so here's how we're going to break this all down. First, we'll look at why the old way had to go. Then, the new philosophy that's taking its place. After that, we'll dive into the new playbook itself, see how it's about more than just money, and finally, we'll look at the big risks and rewards of this whole thing. All right, first up, the end of an era. Look, to really get just how big of a deal this change in Oman is, you have to understand where they're coming from. We need to look at the old way of doing things and figure out why it wasn't going to work anymore.
So for decades, the thinking in Oman, and really across a lot of the Gulf, was pretty simple. The government's main goal when it came to small businesses was to create jobs, absorb unemployment, and just keep everything socially stable. It was all a numbers game. Just get as many people as possible to start their own little business.
And this quote really gets to the heart of the problem. See, when public money starts acting more like a welfare check than a real investment, all the incentives get twisted. The actual pressure to build a business that can stand on its own 2 feet, that kind of goes out the window. The main goal for people becomes just getting the money, not necessarily building a company that can thrive long term.
So, under this old system, success was all about quantity over quality. How many businesses did we launch this year? That was the question, not how many of them actually grew into something big. Commercial discipline, well, that was an afterthought. And here's the kicker. If your business failed, there wasn't much of a consequence. So yeah, the system was great at creating this sort of conveyor belt of tiny businesses, but it was never, ever designed to build companies that could go out and compete on a bigger stage.
But something had to give. Growing pressure on the government's budget and this really urgent need for a more dynamic, modern economy, it forced a change. And that led to this brand new philosophy, all centered around what's called the Future Fund Oman. It's a total reset of the government's role, from just being a sponsor to being a serious investor. Okay, before we get any deeper, we've got to be clear on this term, risk capital. This is super important. It's not a grant, it's not a soft loan. This is money that's invested with the full knowledge that, hey, you might lose every single penny. The investor, in this case the government, takes an ownership stake, equity, and they're making a bet that the chance of a huge return is worth the very real risk of failure. This is the language of Silicon Valley, of venture capital, not state handouts.
So the message here couldn't be clearer. The era of free money is over. The government is officially saying, we're not just distributing cash anymore to get as many people as possible to call themselves an entrepreneur. Instead, it's shifting to become a strategic investor. Capital is now being placed very carefully, like chess pieces, on the bets that have the biggest potential for a payoff, both financially and for the country. And this means funding is now tied to results, to actual outcomes. And, this is key, to accepting that, some of these bets are not going to work out. And that's okay.
So, that's the big idea, the new philosophy. But what does it actually look like on the ground? How does it work? Let's get into the new playbook and take a look inside the Future Fund Oman.
First thing you need to know is the sheer scale of this thing. We're talking about a fund capitalized with 2 billion Omani rials. To put that in perspective, that's over $5 billion US. So no, this is not some small pilot program. This is a massive, long-term commitment coming from the very top.
And here's the breakdown of where all that money is going. Now, the huge chunk of it, 90%, is for big infrastructure projects. But it's that last 10%, that's where you really see this radical new thinking. We're talking about roughly 200 million rials, that's over $500 million, aimed squarely at small and medium businesses and startups. 7% goes to the SMEs, and that other 3%, that's for the really high risk, but hopefully high growth startup.
Now here's a really smart part of the strategy. They've admitted a hard truth. Governments usually aren't very good at picking winning startups. It's just not what they do. So instead of trying to do it themselves, they've outsourced the investment decisions to seasoned global venture capital firms. You've got partners like IDG Capital. These are the folks who backed giants like Tencent way back in the day, and they're now physically on the ground in Oman hunting for deals. It's a great way to lower the risk, and just as importantly, it plugs these local startups directly into some seriously powerful global networks.
And you can totally see this new strategy in the kinds of companies that are now getting funded. We're not talking about your local coffee shop or a small consulting firm anymore. No. We're seeing investments in scalable tech platforms. Think things like IO Kitchen, which is a cloud kitchen platform, or QPay, a buy now, pay later fintech company. These are businesses that are built from the get-go to compete not just in Oman, but across the whole region.
But this whole strategy is smarter than just cutting checks for startups. The fund is also tackling one of the biggest and maybe less glamorous problems that small and medium-sized businesses faced everywhere: simply getting a loan.
And, the problem is pretty stark when you look at the numbers. In Oman, the big commercial banks have been really shy about lending to smaller businesses. They give less than 4% of their total loans to this entire sector. And that creates this huge gap for good established businesses that just need some cash to buy inventory or hire people so they can grow.
So what's the fix? Well, the Future Fund is teamed up with a fintech platform called Beehive, and they're basically trying to reinvent how small businesses get loans. They're using new kinds of data to figure out creditworthiness, and it means they've slashed the approval time from what could be months down to just a couple of weeks. For a small business owner, that is an absolute game changer.
And who are they targeting with this? It's what people call the missing middle. We're talking about businesses that are too big for those tiny microfinance loans, but for whatever reason, they're still seen as too risky for a traditional bank. This whole new loan system is being built specifically to help them bridge that gap.
Okay, so you can see this is a really ambitious, multi-layered strategy. But let's be real, it's also a massive experiment, and any experiment, especially one this big, comes with some serious risks. So let's talk about the challenges and the potential reward if they pull it off.
And this really brings us to the biggest question of all, the one at the very heart of this entire thing. Can a government actually succeed at being a venture capitalist? If you look at the history of this stuff around the world, the results are mixed, to put it nicely. It takes a culture that's okay with taking risks and accepts failure, and that's not something government agencies are exactly famous for.
And the hurdles here are pretty significant. For starters, you risk distorting the market. If the government is the biggest investor in town, will private investors even bother to compete? Then there's that intolerance for failure. Venture capital is a home run game. You expect to lose on most of your bets to get that one huge winner. Can a public fund really handle that kind of loss ratio? And finally, you've got red tape. All the money in the world won't help if your business laws make it impossible for a startup to be quick and agile.
But even with all those risks, the message being sent is crystal clear. Oman is fundamentally rewriting its deal with its entrepreneurs. The old world of protection and entitlement, that's gone. It's being replaced by a new reality that's all about competition and high expectations. The state isn't a safety net anymore. It's a demanding business partner.
And so this leaves us with the final massive question. If this whole experiment actually works, Oman won't have just created a few cool companies. It will have completely rewired the DNA of its entire business culture. The ambitions, the behaviors, everything. The stakes couldn't be higher. This is about moving from an economy that depends on subsidies to one that can actually build globally relevant companies. It's a huge bet, and really, only time will tell if it pays off.